Hey, welcome to the Mortgage Minute. Lots of news. I'm going to go through a lot of different news articles and headlines here. So if you want any information on anything I'm talking about, please send me an email, and I can give you more details. But we're going to go through this quickly, so fasten your seatbelts. First of all, CMHC is still going on and saying the housing market is problematic. Well, you know, one of the ways they could solve that is to walk across the street and suggest to the Bank of Canada they raise rates. But the Bank of Canada is basically saying, no, we're going to stay steady on rates because the economy is not healthy enough to raise rates. So you're going to hear things in the marketplace where rates are going up. Please understand, when you hear that, that's the United States. The Americans are going to raise interest rates, but Canada will not follow suit, not in the immediate future at least. In the meantime, speaking of the United States and the good President Trump, what's the impact that Donald Trump's going to have on the stock market? Well, of course, we saw that the Trump rally from November right through to January, February, March, and into April was going steady, like there was no one in sight. This was an April 27th headline that basically said the investors like the good Trump and they ignore the bad Trump. In other words, no matter how crazy or stupid he does or whatever he tweets, the markets just kind of go, yeah, that's fine. Until remember, when we're talking about the markets, a lot of you, that's your RSPs and your pensions and your retirement savings, etc. Well, guess what? Last week, I think he finally drew the line. And now we're talking about with, I'm not going to go into the politics of it all, but you know what? There's talk of impeachment if they can confirm that the Russians were involved or he had some connection with the Russians on the U.S. election. My goodness, could you only imagine how this is all going to unfold? And that amongst terrorist attacks and everything else. So what happened is last week, amongst new fears that Trump was involved with the Russians in the election, the markets crashed. Well, crash is maybe an oversight. I think there was a significant correction, but I'll tell you this much. We now have, here's an article that says, A Beginner's Guide to Coping with Market Mayhem. So in other words, the markets are starting to predict that there's going to be mayhem and volatility as a result of Donald Trump's discrepancies, should we say. This was interesting. The world's largest hedge fund told clients that the U.S. stocks may drop 11% if Donald Trump is impeached. And it actually goes on to say which countries and which markets will drop by how much in the event of an impeachment. Well, we're already talking about an impeachment here. The markets may be okay even without Trump in charge, said BK Assets' Boris Schlossberg. Sorry, not good on the pronunciation there. U.S. stock market is already assuming President Donald Trump will be impeached. It's amazing. This is fascinating. It's like the old Chinese proverb, may you live in interesting times. My goodness, we're there. Well, again, I'm reverting back and I'm looking at how the high net worth individuals invest their money. I'll go back to Thane Center's article here from the Globe and Mail a few months back where do high net worth investors put their money right now? And again, when he looks at that, we look at high net worth individuals are looking at I know you can't see this, I printed this off the web, but moving into non-correlating assets, including real estate. Now, this is something I've been telling my investors all along. It's not that stocks are better than real estate, or real estate's better than stocks, or private equity is better than this. It's all about diversifying, having a well-diversified portfolio mix. Now, diversification doesn't mean oil and gas. It means stocks and bonds, plus real estate, plus private equity, so that no one world event can bring you down or ruin your financial future. Again, the Tiger 21 member group, which is a peer-to-peer group of about 500 individuals, all high net worth individuals. Their asset allocation is real estate, public equity, and private equity. Those are the top three asset classes and how they're diversified. You can actually go on to the Tiger 21, just Google that, Tiger 21 website. There's a video there that shows a really good video interview that's done on, I think it's BNN or CNN, and it talks about how the Tiger 21's founder is now talking about how the members are shifting to more real estate investments. But one of the other interesting, and talking about diversifying asset classes, obviously on the mortgage side I help clients with real estate investments all the time, but we also help out with private equity. And a lot of people say, well, what exactly is this private equity? Well, here's another article that talks about how family offices invest, how the ultra wealthy invest and buy companies. Well, that was interesting. So you're looking at some of these private family offices, and they've got $100 million to invest. Some of them are actually investing in buying companies. Well, that's great for them. If you got $100 million, you can go out there and buy a company. Well, you know what? How can you participate in that? Well, that's what our next webinar is. Actually, the webinar will be tonight. If you're just getting this video today, the webinar is tonight, so you can listen in on that. My guest tonight is Steve Elliott from EquiCapita. EquiCapita is one of those companies that goes out there and identifies baby boomers who are looking to sell. Maybe a baby boomer has gotten to a certain age where he just is tired of running his business and wants to get out, and the next generation doesn't want it. Well, then EquiCapita comes in and starts picking that up like a Pac-Man and buying these small companies. So we're going to be talking about that. That's just one example of how we can diversify into private equity in the same way that some of the high net worth family offices are currently diversifying. So ladies and gentlemen, like I said, lots of information. Thanks. That's the Mortgage Minute, or in this case, 5 minutes. It's been a busy month for the markets, etc. So again, if you have any questions, don't hesitate to call, ask, and book a free consultation to figure out how all this mayhem is going to impact you and how you can work through it. Thanks again.